This is Alan Bush with the Daily Financial Futures Forecast for Tuesday, April 28th. Starting out with the stock index futures, first of all, we did see some new historical highs yesterday in the S&P and in the NASDAQ. Most of this strength linked to rumors that the People's Bank of China could possibly be embarking on some type of new quantitative easing program, or at least that was the rumor. However, today pressure developing in the indices on reports that the People's Bank of China denied that there was any such undertaking. Also, there was some additional pressure, in fact rather severe pressure, this after the April Consumer Confidence Report coming in much weaker than anticipated. So that caused stock index futures to very quickly decline. However, we're of the belief that any economic weakness that we see is likely to be met with a delayed increase in interest rates from the Federal Reserve. So even though the initial reaction for the weak April Consumer Confidence Report was rather negative, ultimately I think that it would be positive, or will be positive, from an interest rate point of view. So even though indices lower, I think there's a very good chance that we will see a good recovery later this afternoon in stock index futures. Now, moving over to the currencies, the dollar index was weaker in the overnight trade, almost making a 2-month low for no apparent reason. Of course, now we do have that reason with the 9 o'clock Consumer Confidence Report coming in as weak as it did. The dollar very quickly fell on that news. Other currencies very quickly advancing on the same news. We did have good gains in the British pound, even though GDP in the UK coming in weaker than expected. Also, we had gains in the Japanese yen after retail sales on a year-to-year basis coming in much weaker than many analysts had anticipated. So some negative news being ignored by those currencies, probably more of a function of dollar weakness than anything else as far as these other currencies is concerned economically. The star performer, though, is the commodity currencies, especially the Australian dollar, sharply higher now on ideas that the Reserve Bank of Australia will not be raising rates at the policy meeting that they are holding next week, or at least there's a lessened chance. So we continue to favor the commodity currencies, the Canadian dollar and the Australian dollar. Also, a lot of supply this week in the interest rate markets, $105 billion in Treasury offerings, putting pressure on the interest rate futures markets. Even the weak Consumer Confidence Report did not do much to support the 30-year bonds. So I'm thinking that even though we are in oversold territory at the long end of the curve, that once we are finished with the Treasury offerings at the end of this week, that should be the lows. After that, I think we can see the bull market resume. Still thinking long term that the main trend is higher for the 10 and 30-year issues. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.